Danone actually dropped $1 billion on Huel, the tech bro sludge.
A billion is a rounding error right now, Nate. We just hit 438 billion in Q1 deal value.
It is insane. Just desperate CEOs blindly overpaying for AI hype.
Oh, come on. McCormick and Unilever are doing a $44.8 billion tie-up. Mayonnaise is not artificial intelligence.
Give it time, but 12 mega deals in 3 months means the big swing is back. We need to look at who is actually winning here. The rundown, $438 billion in a single quarter. I feel like I need to say that twice just to make sure I read the terminal right.
You read it right. First quarter deal value is up 155% year over year. 12 mega deals. And get this, companies doing acquisitions over 100 million are actually outperforming their market indices by 2.5%.
Which is wild. The market usually punishes buyers. Wall Street is basically handing out hall passes for aggressive deal making right now. Eased financing, the AI panic, it's all just fuel on the fire.
Case in point, Brookfield Wealth Solutions just closed their $3.2 billion grab of the UK retirement provider Just Group. But let's look at the grocery aisle, because that is where the real monster is hiding. McCormick and Unilever Foods, $44.8 billion.
The spice shelf just got a monopoly.
I'm already looking for the antitrust filings. You don't combine Hellmann's and Old Bay without regulators throwing a fit.
Oh, come on, it's a brilliant play. The FTC is stretched way too thin chasing tech deals to care about mustard.
I will take that bet. Food inflation is a massive political talking point right now. They're going to scrutinize every penny of this combination.
Fair. Meanwhile, Keurig Dr. Pepper is buying JDE Peet's. Rafael Oliveira is taking over the new global coffee giant.
Caffeine and condiments are consolidating. But the deal that actually made me laugh this morning, French dairy giant Danone dropping $1 billion on Huel.
The tech bro sludge. The yogurt masters bought the beige meal replacement powder.
Exactly. Danone desperately wants that millennial optimization money. I cannot wait to see a Parisian executive try to market liquid protein to a 25-year-old software engineer.
Hey, don't knock it. I survived on that stuff during my analyst years.
That explains so much about your palate, honestly.
Wow. Okay, moving on to industrials. Arkland just picked up DuPont's Aramids business. That means they now own Kevlar and Nomex.
That's a sneaky good carve-out. DuPont gets to shed some legacy weight, and Arkland gets iconic bulletproof brands. Literally bulletproof.
I love a good literal synergy. Speaking of bulletproof, I want to talk about how the biopharma sector just pulled off a $47 billion quarter.
Eli, Lilly, and Gilead are absolutely hunting right now. But before we get into the pharma pipelines, we need to talk about where all this massive mega deal cash is actually coming from. The big one.
$438 billion. That is not a typo, Maya. That is what Q1 just posted. 12 mega deals, and we are officially at a 5-year high.
Up 155% year over year. I was looking at the financing terms this morning, and it's wild how much the debt markets have thought out. Suddenly, everyone has a checkbook again. Well, a checkbook and a frantic mandate from their board to acquire artificial intelligence capabilities before their competitors do.
And the market is actually rewarding them for writing those checks. You buy something for over 100 million right now, your stock is outperforming the index by 2.5%. That breaks every rule of traditional M&A, where the buyer's stock tanks on day one. The street loves an aggressive buyer right now.
Right, but let's look at what they're actually buying. Half of this volume is just panicked AI land grabs. But then you have Brookfield Wealth Solutions dropping $3.2 billion on Just Group in the UK.
Which I love. It's a brilliant play. Brookfield gets a massive pool of UK retirement assets. They plug it into their alternative asset engine and they print money. It's the classic Apollo playbook, just with a polite Canadian accent.
Oh, come on, Nate. Brilliant? It's an annuity provider. It is literally the most boring business model on earth. They're just buying a giant spreadsheet of liabilities so they can scrape a few basis points on the spread. $3.2 billion is a very steep price for a spreadsheet.
Boring is beautiful when it comes with guaranteed capital. Listen to my banker roots showing, but permanent capital vehicles are the holy grail. You lock up those retirement funds and you never have to fundraise again. You just invest the float.
I just don't see the organic growth there. I read the Just Group footnotes. Their margins are getting squeezed by UK regulators. Brookfield is taking on a massive compliance headache for that permanent capital. I need to see the actual yield before I buy the genius narrative.
They have the infrastructure to handle the compliance. I'm telling you, it's a home run.
We will see. I'm just skeptical of the premium. Now, if you want to talk about a truly ridiculous premium, we need to talk about French dairy.
Danone.
Danone buying Huel, $1 billion.
I saw that. The yogurt kings are trying to pivot to tech bro meal replacements.
It's peak corporate midlife crisis. They bought a sports car, but the sports car is a powdered protein shake.
Hey, Rip City Rising just bought a majority stake in the Portland Trailblazers, so maybe tech bro diets and sports franchises are the new defensive assets.
Please don't give the bankers any ideas. Next week, someone is going to pitch a SPAC for pickleball and oat milk.
I would absolutely buy that. But speaking of massive consumer plays, we should probably talk about the $44.8 billion elephant in the room.
McCormick and Unilever Foods. The antitrust filings start hitting tomorrow, and I guarantee those regulators are going to be very hungry. Plus, we need to look at the biopharma sector. After a $47 billion quarter, Eli Lilly and Gilead are definitely not done shopping. Voices. Yaho?
So I'm reading this analyst note this morning, and they're claiming the market is finally rewarding aggressive deal makers again.
Define rewarding, because I saw that exact same note.
They're saying companies that closed acquisitions over 100 million in Q1 outperformed their indices by 2.5 percentage points, which, considering we just capped off a 5-year high of 438 billion in deal value, feels like real validation for the buyers.
Oh, come on. You know exactly how skewed that data is. That outperformance is entirely propped up by the AI premium. If you put the letters A and I in your press release right now, your stock jumps 3%. That isn't the market rewarding smart M&A. That's the market rewarding a buzzword.
See, I disagree. You don't get a 155% year-over-year jump in deal value just from throwing buzzwords into a pitch deck. The eased financing conditions are real. The debt markets are actually open again. People are writing real checks, Maya.
They're writing checks? Sure. But are they writing smart checks? I looked at the 12 mega deals making up that Q1 surge. A massive chunk of that is just panicked companies overpaying to secure artificial intelligence capabilities before their competitors do.
It isn't just tech panic, though. Look at the food sector. Nothing screams cutting-edge tech like McCormick and Unilever Foods combining for $44.8 billion.
Okay, fair. I highly doubt they're using machine learning to optimize the mayonnaise to black pepper ratio.
Exactly, real deals. Boring, beautiful, cash-flowing deals.
We'll see how beautiful it stays when the regulators wake up, which is exactly what I'm tracking for tomorrow. Antitrust watchdogs are starting their initial reviews on that exact McCormick and Unilever monster.
Plus, we need to see if biopharma buyers like Eli Lilly and Gilead are going to keep their wallets open after capping off a massive $47 billion quarter. Spill the tea. I'm just picturing these chic French dairy executives standing around a boardroom trying to choke down a lukewarm vanilla Huel shake.
You know, they spit it out into a napkin the second the pitch ended. But Danone dropping exactly $1 billion on a tech bro meal replacement brand is just peak corporate midlife crisis.
Oh, come on. It's a smart play. They desperately want that younger demographic. They're tired of just selling Activia to my mom.
They're paying $1 billion for pulverized oats and pea protein. I looked at the comparable multiples, Nate. The customer acquisition costs for these direct-to-consumer powder brands are absolutely brutal right now. Danone is buying a marketing treadmill.
True, but Huel has a massive cult following. It's the exact same demographic that's probably thrilled about Rip City Rising quietly snatching up a majority stake in the Portland Trailblazers.
Wait, the Trailblazers? The basketball team? When did that close?
Just hit the wires? Tech money meeting sports franchises. It's the ultimate billionaire flex right now. You sell your software startup, you buy a basketball team, and you drink your Huel courtside while telling everyone you're biohacking.
I can't roll my eyes hard enough. but it fits the broader market vibe. Eased financing is making everyone feel invincible again. Q1 deal value just hit $438 billion.
155% jump year over year, and the market is actually rewarding the aggressive buyers. Companies doing deals over 100 million are outperforming their indices by 2.5%.
Which brings us to the actual massive food sector shakeup. Danone is just playing with protein powder, but McCormick and Unilever Foods are trying to combine in a $44.8 billion monster transaction.
The grocery store spice aisle is about to get completely monopolized.
Exactly. Antitrust watchdogs are going to have an absolute field day with that one. I'm pulling the early regulatory filings tonight so we can see exactly where the overlap is.
While you dig through the spice footnotes, I'll be watching the biopharma sector. They just capped off a $47 billion quarter, and I'm hearing whispers that Eli Lilly might announce another target by tomorrow morning. Tomorrow's radar. So tomorrow morning, I'm refreshing my browser for the antitrust filings on that $44.8 billion McCormick and Unilever Foods mashup.
You really think regulators care about a spice company buying mayo? I'm way more focused on biopharma. They just closed a $47 billion quarter. Eli Lilly and Gilead are definitely still hunting.
They're hunting, sure, but the market is literally begging for aggressive buyers right now. Companies doing deals over 100 million outperformed their index by 2.5% this quarter. It's a clear mandate to go shopping.
That is terrible logic, Nate. They outperformed because financing finally eased up, not because every 9-figure deal is suddenly a stroke of genius.
Tell that to Danone. They just spent $1 billion on Huel. $1 billion. For Tech Bro meal replacement powder?
I actually read the Huel financials. The gross margins on that powdered sludge are shockingly good.
Sludge with good margins, put that on a deal toy. We'll see if the market actually buys the narrative tomorrow.